A home equity line of credit is a great option in today's market. Home equity loans are at the highest origination volume they've been at in decades. And the reason for that is that most people who own a home are sitting on a ton of equity right now, which is awesome. And they're also sitting on a very low interest rate, which is awesome. So if you want to get equity out of your home, you don't want to refinance and get rid of your 2.75 interest rate and take now a 6% interest rate or a 5% interest rate to get equity out of your home, because that's going to cost you a lot of money. You can get a home equity line of credit as a second mortgage. And the home equity line of credit, the way those work, think of it like a credit card. It's a revolving line of credit. And let's say I had a credit limit of 150,000. If I take out 25,000, I'm only making payments on 25 grand. I'm not making payments on 150 grand. And as I pay that 25,000 down, let's say I paid it down to zero, then I could take money out on it again. So it's just like a credit card. You take money out, you pay it back, you take money out, pay it back. With a home equity line of credit, you can borrow up to 95% of the appraised value of the home. So we would do a new appraisal, and then minus whatever you owe on the mortgage. So that's how much you can get as a home equity line of credit. You've got to qualify for it the same way that you qualify for a mortgage. So we've got to look at your income and your assets and your bank statements, pay stubs, W-2s, 2 years of taxes, all of that, credit. Interest rates are determined by your credit score. You can do a fixed or variable rate. The loan term is over 20 years. And it's very low cost to get the home equity loan as well. So that's a great option if you want to pull equity out of your home to remodel. Maybe you have debt you need to consolidate. Maybe you want to take money from your home equity loan and use that to fund the down payment on an investment property. I think right now is a good time to pick up an additional real estate property now that the market is balancing out some. So that's how a home equity line of credit works. And we offer a couple different products for that. And then we've got a one-time closed construction loan. So a construction loan allows you to finance the cost of a custom home build. So if you're getting a home from like a big name brand builder, they're going to cover the cost of the financing. You don't need a construction loan. So you're just making your down payment and closing costs. At the end of the transaction, they'll collect some deposits up front. With a construction loan, you are financing the cost of the construction. And you can work with a custom builder. So very high level on how this works. Let's say I had bought a lot for 150,000. So I paid cash for a lot, 150, and now I want to build a home on it, and it costs 600 grand to build the home. The total acquisition cost of that property is 750,000, the cost of the lot plus the cost of the home itself. And I'm making a down payment based on the total acquisition cost, $750. So on a conventional conforming loan, minimum down payment's 5%. We also offer FHA, has a minimum down payment of 3.5%. We also offer a VA product that's zero down up to $1 million. Then you have to start putting money down beyond that. But then the way this works is we appraise the home before construction is started, and the appraiser is appraising the home based on the plans and specs from the builder. So you would get pre-approved with us, then you would sign a contract with your builder, itemize out the scope of work and the cost of the home. Then the appraiser would appraise the home based on the scope of work, all the finishes that are going to go into it, the size, the features, all of it. Then once the appraisal is done, we go back into underwriting for final approval. When we've got final approval on the loan, then you go in and sign closing paperwork just like on a regular mortgage.